S&P 500 just broke a major level today. We're going to break it all down. Let's start from top to bottom right now. All right, getting right into it. On a monthly chart, you can see the S&P 500 all-time high was right around 6160, 6163. You can see I have this support and resistance, yellow, big, bold, horizontal line right around 6052. I either previously with my community, I had a head and shoulders that I thought might tap this yellow line, and then a second possible opportunity for the head and shoulders. So this kind of being a wide three-headed head for the head and shoulders, and then the shoulder being on both sides, left and right here. So that was one option for the head and shoulders. I also had another area that I was looking at. I'll draw that in so you can see what I was thinking. So left shoulder, right shoulder somewhere over here. That hasn't played out as of yet. If we go down to this lower level on the daily, this was my second option for the head and shoulders. I'll draw it again for you. Was here. That would have been my left shoulder. That would have been my head. And then you can see this ended up being the left shoulder right around 5726, just a little bit higher. We ended up with a right shoulder that confirmed today based upon the S&P 500 breaking through this previous low. And I'll circle it so you can see. This is the low that we had put in right here. And today we had a bearish candle that broke below that. So you ended up having a 1, 2, 3 move that confirms we're in a short-term downtrend. So one impulsive move down, then a 2 move for a pullback that doesn't quite take out this high, and then breaks below the previous low, which was here. That puts us in a short-term downtrend on the S&P 500. Now, if you're interested in seeing how I break these companies down every week with my community, stay tuned, stick around to the end, and I'll be sure to drop some information on you on how you can join the community and learn more and get this on a consistent basis for not just the ES, but multiple stocks every day in the community. All right, so back to it. On the daily chart, the level that got broken, just so you can keep this, because that could turn into support, roughly around 55.10. And now we have this bearish candle here. This is where I want you to pay close attention. This is what we may see next on the S&P 500. But it's not even the most important thing. So the first thing, I ran a Fibonacci from this previous low, major low, back in August 2024, all the way to the high. And you can see we broke the 61.8 retracement on the Fibonacci, and then looks like we could be headed lower to the 78.6. I don't necessarily see anything stopping with the exception of maybe this pullback area, but there's not much else happening between now and this 78.6 retracement. You do have a previous high back in April 2024, right at the 78.6 retracement, and a small peak right here that put in a new high back in May 2024. So there is reason to believe that we could get to this point and stop, right? Just based upon the Fibonacci, a little bit of support and resistance on the daily time frame, right? So I told you that wasn't even the most crazy thing about breaking through this level and then possibly seeing a 78.6 touch with this previous support and resistance. But the Fibonacci from the top down is actually the one that is the clue to what could happen in the future. So from the top to this 50% retracement, to this previous low, back to this point was a 50% retracement. And then we pushed and broke lower. Now, to complete this Fibonacci, we'd want to at least go to the first extension, which is the negative 272 on the Fibonacci. That one lines up perfectly, almost to the dollar or to the cent. That one lines up perfectly with the 78.6 retracement, almost to the point, which also coincides with this previous support and resistance. I'll box that in so you can see it. All of this is converging at one point to make for a great area of liquidation or liquidity for the markets to reach for over the next few days, next week. Nothing's guaranteed. If anybody tells you, they're lying, but it is definitely an area that you should put on your charts. It's right around 55, 53, 57, 53, 38. Keep that area marked on your chart and go ahead and mark the bear market right around 49.19. I think both levels are super important. None of them guaranteed, but both levels are super important. Now, the next thing I wanted you to see on the ES specifically is, well, what opportunities do we have to trade potentially, right? Hey, the trend is your friend. So we're in a downtrend. I wouldn't trade it on the impulsive move. I'm always looking to get in on the pullback. in almost, I'd say, 90% of my trades. So in this particular case, obviously the trade at the 50% retracement at 58.35, that would have been the ideal setup to take this down. You also got another slight opportunity, I guess that was yesterday, when it pulled back a little bit more. So I'd be waiting on a pullback here in order to get in a trade to see if it's going to go down to this area or possibly even into bear market territory. So those are a couple setups that you might want to take a look at. Those are a couple price points that you might want to dig into. And if you want to look even further into the future, let's take it out to the monthly, or sorry, let's go to the monthly. If you want to look a little bit further out to see what could be in store for the ES, take a Fibonacci from the October 2022 low, run it to the top, and the 50% Fibonacci is just below where the bear market is. I'm gonna go ahead and add the 38.2, see where that falls, see if there's anything really nice sitting up in there. And then the second extension, as well as the low from August 2024, sit right around that 38.2 retracement. So those are some levels that you could possibly put on your chart. I'll add a couple of these levels with pricing so that you can jot those down for yourself. So the 38.2 retracements right around 51.45, and then the 50% retracements right around 48.31 on the ES. So those are just some levels to take a look at. Oftentimes I find on the ES, we very rarely get back to the previous high. It's not to say that we won't, but we rarely get back to the previous high. You can see where we dropped here in October 2022 and failed to get back to the pre-COVID high. Even for the March low in 2020, we failed to get back to this high back in April 2015. So I'm not saying that it couldn't happen, but it's just not a guarantee that we can get back to the high. Oftentimes the big money gets in and they start pushing the market up just before you get to those prime locations on the chart, which are previous support and resistance, previous highs and previous lows. So again, I promised you at the end of this video, I'd let you know how to get more of this kind of breakdown analysis from top to bottom, as well as entries on the option side. That's in our accelerator community. I've linked it in the description for you to join, and there's still an opportunity for you to become a founding member. There's limited spots left, but if you're interested, go ahead, click the link in the description and we'll see you there. And until next time, I'll see you.